All right, you guys, good morning again. This is the 6 a.m. trading plan. Oh gosh, call. Welcome, welcome. We're gonna pretty much go through, 5 to 6 rules that you need to follow when it comes to your trading journey, right? And the first thing we want to dive into before we get to the rules is making sure that you understand that a firm foundation is important. It's funny. I follow this guy on Instagram. His name is, what is his name? Prince Donnell, and he makes really, really good content. And one of his most recent content is he was walking past a construction site, and there were no digging out the foundation, and he made such a good point about having a good foundation, because if he gave a story about some really, was it him? All right, guys, I do so much personal development. I do remember where I get my stuff from, but there's some really luxurious apartments, or no, is it apartments? It's actually some homes, but it looks like an apartment building. The homes inside of this building range are no cheaper than 7 figures, right? Very, very luxurious. I don't remember what state it's in, but over time, they realized that this building is starting to slant, right? This building is starting to slant. And when the architectures or whoever, started to do some work and on why this building is slanting, they realized that the foundation that this building was built on was sand. Right? It was sand, and these homes in this luxurious building went from yeah, Kurt. I'll look for the video and send it to you, Kurt. Right? These homes went from being 7-figure luxurious homes to now it came down like $200, $300, $400,000 worth, just because of it sinking. It was sinking like 2 to 4 inches every year, right? And so if they had dug deeper, right? If whoever was doing that structure had dug, I think they said about 10 feet deeper, it would have been the perfect foundation to build these houses, to build this luxurious apartment on. And so I told you guys that story to tell you that don't only stop at these videos that we gave you. When you get started, whoever gets you started will tell you, look, go to the FOREX Academy and watch video 101 to 232, and then, go live, and there's many more videos. You only watching video up to video 232 and then jumping into trading is you digging all the way down to that sand and building this luxurious, what seems like a luxurious apartment building, and then years after years after years, you realize that you're starting to lean, you're starting to sink, because you didn't dig deep enough. You didn't dig deep enough in your foundation to build a good apartment building, right? And so there's so many videos that'll break down Fibonacci and market structure by the CEO of the company. Those are the videos that are past 232. So don't just watch 232. Yes, start there, but definitely continue to go down, where you need that firm, steady foundation when it comes to your knowledge. And don't just watch it one time, you guys. I give myself a refresher every 6 months when it comes to the basics, because it's the basics that you have to revert back to when you find yourself in a very, oh my gosh, this sun is coming through, you're hot, right? And you find yourself in a very sticky situation in the market. Is the basics that'll help you, right? So make sure you guys go back to that and finish watch these videos, okay? All right, so this is the training plan here, right? That we pretty much will follow / risk management. You can take a screenshot of this. If you don't have it, we'll go through it in detail, but you can have it to look back at, to teach anybody in the future. And this is another tip as well, for individuals that really want to get better at risk management, right? Teach it, right? You guys can imagine, I've been doing this training now every Tuesday morning for an entire year straight, over a year, right? Sometimes I do it on a night, right? Sometimes I do it randomly for some of my family members, right? But I've been doing this same training for a year consistently. Imagine how hard it is, right? Not that I'm trying to make it hard, but imagine how hard it is to enter church and not practice what I've been preaching. So if you're trying to get better at risk management for yourself, teach it to somebody else, okay? This is our supreme chart. This will help you if you are not very good at lot sizes and the pick count relationship and the dollar amount. This will help you for sure until you get to that place, so you can go ahead and take a screenshot of that, right? You got your micro lots, your mini lots, standard lots, and this say a lot is not listed in the videos in the academy, but this is definitely a place that we will all get to one day. All right, so I hope you have that screenshot. Let's move on to rule number 1. So rule number 1 is simple, you guys. No technical stuff. You don't have to be a top trader or a trader to do this at all, right? It's simple. It starts in the money and it ends in the money, right? Everything else in the middle is just a cherry on top. But you want to be relaxed when you're trading. Very, very relaxed. Like, you don't want to be annoyed with someone. You don't want to, be going through anything that personal, family, anything that will have you irritated and doing things out of character, like entering a bigger lot size, right? Where you are trading, right? So I want you guys to take that in the chat. Don't just take relax with 1x. We want to stress it. Oh, when you say relax, you want to be like, relax, right? So go ahead and type relax in the chat, right? This is important. If you can feel, when you feel relaxed in a trade, you want to feel as if you need to be staring at the charts every second of you being in that trade, right? Trading is 10% the skill, 90% the mindset. And you guys that have been here for a couple months now, you know how important the mindset is. And if you're new here, your mindset is going to have to go to a new place if you really and truly want to make the type of money that you are hearing or seeing yourself that you want to make in this space, right? You are going to have to become a better version of yourself to make the type of money here in this foreign exchange market. And it'll happen up here. It wouldn't happen in you knowing everything about trading, right? It wouldn't happen that way. Listen, there are persons that are at least 37% accurate and still very profitable. I promise you, right? You don't have to be the most skilled. You just have to be the most developed, all right? There are many personal development tools that you can use. I suggested a book, Trading in the Zone by Mark Douglas, right? There are many, many videos on YouTube that you can study. And then we have our MMX folder in the Academy with Bob Proctor. If you don't know who he is, you should definitely Google him. He has a series every Thursday in the Academy. His package is $30 a month. You get to learn from him 4 times in that month. Promise you that's a steal of a deal, because Aki Born Kailash there had to pay $1,000 to sit in a room with him for 3 days in Los Angeles. Okay, so what we're getting here is amazing. So definitely, guys, prioritize personal development and just growing your mindset, and the skill set, it'll be easy. All right, so rule number 2. Rule number 2 is risk no more than 10% of your account per day. So whatever your account balance is, you don't want to lose more than 10% of that, right? So let's see, how do we figure out 10%, right? I found the most simple ways to figure out these things, and I wish I knew them when I was in school. I probably would have done better at math, right? But it's simple, you guys. If you just want to move your decimal point 1 place to the left, so whatever your account balance is, you can literally write it down, right? So for example, if you have $100, you write it down, you move that decimal point 1 place to the left, boom, 10% of $100 is $10, money, right? It's $10. Simple stuff, right? The next best simple way that you can find 10% of whatever balance you have is Googling it. But I promise you this is quicker. All right. If you have a $200 account, you move that decimal point one place to the left, boom, 2%, 10% of 200 is $20. Now tell me in the chat, if I move my decimal point one place to the left with my $1,000 account, what is 10% of $1,000? Let's see who's quick with it in the chat. What is 10% of $1,000? 100. There we go. Simple stuff, you guys. Quick, fast, and in a hurry. So if you have $56 and flat, or $56.60, you just want to move that decimal point one place to the left. 10% of that is $6.60. Easy. All right. Super, super easy, you guys. Everybody is now a mathematician. All right. Let's move on to rule number 2. Sorry, rule number 3. Rule number 3 says never use more than 3% of your 10% per trade. So now you know, okay, I shouldn't risk more than 10% of my account for the day. Now, how much should I risk per trade is 3%, right? You don't want to put all of your eggs in one basket. You don't want to take just one trade. Oh, I can risk 10% for the day. I'm going to risk 10% on this one trade. No, you don't want to do that, you guys, right? You want to divide your risk amongst many trades, so that if you happen, you want to leave room for mistakes. If you happen to lose one trade, that don't mean that you don't trade for the rest of the day. You have the option to take another trade, or maybe another trade up to 10% to, put yourself back in profits for the day. And if you do not end up in profits for the day, that's fine, right? You are managing your capital, and you reach your threshold for the day, and you stop, come back tomorrow. All right. You don't need to be over leveraged, Omar, over leveraged, Olivia. No offense to any Omars or Olivias on the call, right? That just sounded really, it rhymed with over. All right. So Gil, there's no need to over leverage. No need to over leverage whatsoever. Your account will thank you over time if you use proper risk management. So rule number 4 says, get 8 to no more than 2 to 4 trades for the day, right? You don't need a whole lot to make a lot, you guys. You just need you just need quality trades to bring quantity amount of money, right? So depending on the amount that you are risking per day, we're going to use the example of 3%. If I'm trading 3% of my account per trade, then I only need to take up to 3 trades for the day, because my target to stop if I lose is 10%. If I take 3 trades, that's 9. Then I only have a percentage left, but I'll be fine with that percentage to roll over for the next day, right? You want to make sure that you're entering your stop loss and your take profits for all the trades. You won't receive a trade idea from any products or the trade ideas group without a stop loss, or a take profit, right? They're all gonna come with a stop loss or a take profit, right? These are your safety nets, because you entering a trade without a stop loss or a TP is you pretty much saying, look, you could do whatever you want with my account balance, right? That's what you're telling the broker if you don't have these things in, right? They're your safety belts, right? Your stop loss is your safety belt. Think about it. It's like a seatbelt. Sorry, think about a seatbelt when you are in a car, right? Seatbelt doesn't save all lives, but it saves most, right? A stop loss, the only time that it wouldn't save your account is if the market is super volatile, like during major news events, okay? That's the only time it won't save you. But apart from that, it'll definitely have your back strap, all right? And be patient. And I want you guys to notice how patient is spelled here in the takeover, right? It's spelled with a P, because patience pays. It may take you a little longer than the other person, right? You may be seeing in the results group, somebody's made $1,000 today, somebody made $15,000 in one day. You gotta trust your process, right? That's what it's your process. It isn't our process, right? It is yours. Your journey is not gonna look like mine. My journey is not gonna look like Danny says. Danny says journey is not gonna look like Kurt's. Kurt's journey is not gonna look like Aki's. We are all on the same path, but our journey is gonna be different, right? And that's what you need to be patient with yourself. If you come into this rushing, that you're telling yourself, look, I don't trust that. I don't trust that you're gonna go through this process. This is you speaking to yourself. Like, I don't trust that I'm gonna go through this process the right way, and so I want to rush it. Then you're still gonna end up going through the process in the wrong way, because you're not even trusting it enough to even admire the view as you go through it. And the view could teach you so much, right? So be patient. It actually pays you. All right. This is a copy paste wait profit system, you guys. Even if you're trading HFX, you still gotta wait at least 60 seconds before that trade closes, right? Be patient. Money is made here without you having to physically work for it. We're pressing a few buttons. There's no reason why you should think that, the market should go in your direction as soon as you enter a trade. Let it do its thing, right? You wouldn't like that while you are at work and you are given an assignment and somebody is staring at you like this, like want you to hurry up with that assignment. You wouldn't like that, would you? Right? And that's how some of you treat your trading account. You are just in MetaTrader 4 staring at the trade, hoping that it goes your direction, like right now. Let it breathe. Remember, rule number 1 said to relax, right? And then you want to withdraw your money or do internal transfers, right? You are here to, sorry guys, right? You're here to pay some bills, you're here to buy some groceries, you're here to, put some gas in your car, make some withdrawals, right? If you deposited $100 and you grew that by 100%, pay yourself 50% of the profits, right? Make a withdrawal. We gotta make it a habit of withdrawing small amounts. You don't only have to withdraw big amounts. Remember, the money in your trading account isn't yours until it hits your bank account. It's in your trading account, it's in your MetaTrader 4, so that means it's there. It has a chance for it to be used. But once you wire that back to your bank account, you can use it in the supermarket. You can use it in the gas station. You can use it to buy some food, right? Give your kids some money, right? That's how you use it. But if you have it in MetaTrader 4, the only usage is entering another trade. Pay yourself. I have some individuals in my group. I had to tell them this over and over and over again. No, they're making 3 to 4 withdrawals in a week, right? As soon as they make a quick $50, it withdraw. They're treating their trading account balance like petty cash. Okay, start my morning with $50. Boom, whatever I made on this $50, right? They have developed their skill enough that they can grow $50 to 100%, 150% some days. That's how good they've gotten, right? And whatever percentage they grow it by, withdraw. There's specifically a guy in my group. He makes, like I said, 3 to 4 withdrawals a week. Okay, get in the habit of paying yourself. That's why you're here. All right, you guys. So let's make this super practical, right? Let's put these first 4 rules into play right now. All right, drop some tools in the chat if you guys are with me. Right, I know some of you may be getting ready for work right now, but let me know you guys are with me by putting some tools in the chat. All right. So boom, awesome. So remember, we are right now with the takeover. We're doing a 200% growth challenge. All right, 200% growth challenge, and whoever I believe is the first 3 or 4 individuals that grows their account by 200%, you're gonna have the chance to manage. First place is gonna have the chance to manage $100,000 account. Okay. Second place, I believe, is gonna have the chance to manage a $50,000 trading account. Third place, I believe, is $25,000. Don't quote me, right? And if there is a 4th place, it'll be $10,000. Okay, don't quote me though. Yes, you can quote me on the fact that there's a chance to manage a large account, but the amounts, don't quote me. 2 weeks ago, I did when I did this training, I did a $10,000 account. So this week we're gonna do $25,000. All right, $25,000, because I want to get you guys in the mindset of having and managing large capital. Right, it hits different when you manage a larger account. Trust me. All right, because when you think about 10% and you have $100, is $10, and that's why some of you will feel the need to over leverage, because in your mind, making $10 on your first day doesn't seem like a lot, right? But we got to remember what it can do over time. Okay, if you really and truly want to manage these levels of account balances, you're going to have to be disciplined with this percentage rules. You're going to have to start to think in percentages right now, because you're not going to be able to manage this level of account if you do it, right? You're not even going to be in the lineup to manage this level of account, because you're not going to get to grow your account by 200% by the end of the 90 days, because you keep putting yourself back by over leveraging. Right, guys, we begin with the end in mind. Talk to me in the chat. Who wants to manage one of these accounts? Right, and every Tuesday morning, like I said, I'm gonna do this example here with another account balance. Right, we did $10,000 2 weeks ago. Now we're gonna do 25. Next week we'll probably do the 50. The next week we'll probably do the $100,000. So you guys have an understanding of what that type of capital could do for you in a short space of time, right? Talk to me in the chat. Who wants to manage one of these account balances? All right, how many people we have on? We have 19 of you on. All right, how many of you who wants to manage one of these trading accounts? Specifically, who wants to manage a $25,000 trading account? Let me know in the chat. Because if you don't feel as though you can, you are right. And if you feel as though you can, you are also right. Right? If you think you can or cannot, you are correct. Right? I know for certain I can manage a $25,000 account. Like, no doubt. Why? Because I practice what it is that I teach. I use proper risk management. I follow my trading plan. I actually stay below my means. Okay? And so that means we're gonna do very, very well. All right, so I only see Jabari, Chelsea, and Kirk. 3 people out of 19 want to manage this $25,000 account. So great. Let's give you guys a preview of what a $25,000 account can do for you. All right, so boom, $25,000. We're gonna use our handy dandy trusty Stingu app to help us calculate our risk, right? So we're gonna put $25,000 as our balance. We're risking 3% per trade. And then the first trade we're taking here is GP USD, and the risk is 23 pips, right? So we're gonna put 23 here, boom, and we're gonna tell the app that we're trading GU. So the app is telling me that every trade I take on my $25,000 account, I'm gonna be risking $750. Now that right there may have made somebody uncomfortable, because your 3% may only be $7.50, right? But 3% on $25,000 is still 3%, but the numbers are gonna be different, but it's still 3%. This is why we tell you guys, think in percentages, get used to thinking in percentages, because when you have this level of capital, 3% is still 3%, but the 3% here just looks like $750. Whereas 3% on your $100 account is $3. 3% on your $1,000 account is $30, right? It's different. Yes, I'll put the record in the chat. It's different. It's still 3%, but the dollar amount looks different. If you can get accustomed and comfortable with hearing 3%, regardless of what that dollar figure looks like, I promise you, you'll still be able to remain relaxed in every single trade. Okay, so 3%, 750. Based on this specific risk of this trade that we're taking here, the calculator is telling me that I could use a 3.26 lot size. So that's the lot size that we're gonna plug in right now. 3.26 lot size is not $3.26. No, this is also equal to $32.60 per pip. Now this is stretching your mind, and this is where the supreme chart will come into play, right? How do I know that this is $36? Now watch this. Look at we guys, we at the standard lots here, okay? So look, 3.00 is $30 per pip, right? A 0.2 is $2 per pip, yeah? And then a 0.06 is 60 cents per pip. So if I add my $30 to my 2, that's $32. And then, you know, the cents will be $32.60. Are you guys with me in how I got this dollar amount for this lot size? Is that clear for everyone? Right? If there's a number in front the decimal point, this is where we go into tens. Okay, so every one is 10. So a 1.00 is $10 per pip. A 2.00 is $20 per pip. 3.00 is $30 per pip. If it's the first digit behind the decimal point, this is dollars, right? So if it's 0.1, it's $1 per pip. If it's 0.2, it's $2 per pip. The second digit after the decimal point is cents, right? So if it's 0.01, it's 10 cents per pip. 0.02, 20 cents. 0.06, 60 cents per pip. The lot size is 3.26. That's $32.60. If that's clear, put an AC in the chat. All right. So let's move on to our second trade. Our second trade, remember, we're risking 3% per trade. That means we can take 3 trades. So we're taking these 3 trades. Euro NZD, and the risk is 13 pips. So we go back to the app here real quick. Boom. But we're not changing that 3% because that's we're consistent, right? 13 pips, Euro NZD, calculate. Boom. Now look at the significant difference in these lot sizes. But I want you guys to pay attention that it is still 750 that is being risked, even though my lot size is significantly different. That's more than double, a 8.24. But I'm still risking 750. Why? Because I'm consistent with my percentage risk. Okay, so 8.24. Boom, 8.24. This is also equal. Can somebody tell me in the chat how much that is per pip in a dollar amount? Right? How much is 8.24 in a dollar amount? Let's see who's on it. Let's see who caught it. Talk to me real quick, you guys. 8.24. How much money is that per pip? $82.40. There we go. There we go. I'm gonna put PP. All right, $82.40. I'm stretching you guys' mind this morning. Stretching it. This means that every time the market moves a pip for you or against you, $82 is gonna show up on your broker account, on your MetaTrader 4 screen. Every pip, $82, $82, $82. But you're still using proper risk management based on your capital. All right. So next trade, Euro GBP, we're risking 15 pips. We go back to the app, and the only thing we're changing is that stop loss in pips. Euro GBP, boom. Again, still 750. Lot size is 3.59. 3.59. This is also equal to $35.90 per pip. All right. So we in our 3 trades, we are, so let's make sure we're following our risk management rules. All right. Let's make sure we're following our risk management rules. This is saying, right? This is saying, I mean, 3 trades, right? risking 3% each. That means my total risk in percentage is 9%. Let me know if I'm right. Okay, so we're risking 750. Right? We're risking a total because I know you guys still thinking dollar amounts. So we're in 9%, but each trade we're risking 750. That's a total of 22, sorry, $2,250. Talk to me in the chat. Am I following our risk management rules? Let me know. Am I following our risk management rules? Or am I in there? We know we're supposed to risk no more than 10% for the day, right? And what is 10% of $25,000? Let me see. Move my decimal point one place to the left. Boom. Are we following our rules? Talk to me in the chat, you guys. Talk to me. Indeed. Indeed, we are following our rules. So let me show you guys. If you are comfortable, all right? If you are comfortable with this figure, you can go ahead and take these type of trades. For me personally, you guys, when I have this type of capital, I will not be risking 10% of my account for the day. There's no need to. There's no need to. This is me personally. Okay, this is me personally. With a much, much smaller account, we tell you guys 10%. But really and truly, you don't need to be doing that amount per trade, per day. All right? This is me personally. Okay, and it's been working out very fine for me. All right. So let's see how it looks, what it looks like once these trades play out. All right. So boom. The first trade, GBP USD, stop loss hit. You guys know me already. I look at worst case scenario, minus 3%. Minus 3%. Euro GBP, that happened to move before Euro XZD and stop loss hit here too. Minus another 3%. And then one trade out of 3. You are at this point when you manage this level of account, you're relaxed. You know that you are using proper risk management. You don't worry if the trade hit stop loss. You're cool because you use proper risk management, right? And this trade right here, TP hit. TP hit. You lost 2 trades. One of the trades. Let me show you guys the beautiful thing about trading Forex, okay? There's something called risk to reward, all right? So our risk was 1, which is equal to that 3%. Now, how many times can our risk go into our reward? The risk was 13 pips. The reward was 80 pips. If we divide 13 into 80, that's a 6. You can get that 6 times. You're growing your account 6 times what you are risking. All right. So that means, again, you were risking 3%, right? You're risking 3% to gain an 18% reward. That is what risk to reward looks like. Okay, you guys? So look, we won that trade. The trade was an 80 pip TP. Let's multiply 80 by our lot size, which is 8.24, right? Which is $82.40, right? You were able to make $6,592 from this trade, right? You were able to profit $6,592. Don't believe me? Do it yourself. Multiply 80 times $82.40. Tell me what you get in the chat, because I think it'll match this. I think, I don't know, my calculator was right. 80 times 82, 40, $6,592. Everybody got that same calculation? Everybody got that same calculation? US. Now watch this, you guys. You lost a total of 6%. You gained 18%, okay? But you lost 2 trades, which was a total of 6%. That means you were able to grow your account by 12% for the day. You lost 2 trades, one, but you were still up 12% for the day. What does 12% looks like in dollars? Let's see. 750. The 3% was 750, right? Remember, 750 is what we were risking. When you minus 750 twice, that's $1,500. You were still able to close out your day with $5,092. That's what your profits look like on a $25,000 account. Talk to me in the chat. How do you guys feel about that? $5,000 US, USD. You lost 2 trades, one trade, and you're still up. Some people gotta work at least half of a year for that. Some people gotta work 6, 8 months for this type of money. And because you follow your risk management rules, you are able to make that with that managed account. But guys, you gotta get disciplined now with that $100 account. You gotta get disciplined now with that $500 account. You gotta get disciplined now with that $300 account. Whatever your account balance is right now, you gotta keep this same energy, because the 3% here is still 3% with what you are managing right now. It's still 3%. These numbers just look different because it's a much larger capital. The only way you're gonna be able to manage this $25,000, you have a chance to manage this $25,000 account from our 200% growth challenge, is if you keep this energy with your own money. Because nobody's gonna give you their money to manage if you can't manage your own. All right. So guys, this is what it looks like for a $25,000 account. I want you guys to take a screenshot of this and like start to really internalize it. Because until you go there, you're not gonna get there. Go there in your mind first. See, like, sit down and do this same calculation on your own with a $25,000 account. Shoot, you can open up a demo account on your broker for $25,000 and actually, start to practice this thing while you're keeping that same energy in your live account. And you will look up and see at the end of this 90 days that you are one of the persons, and you never know, you may have settle yourself short for 25 and then come and get the $50,000 account or even the $100,000 account. But it starts every single day with you keeping following these rules in your trading plan. All right, you guys. So rule number 5 is called pops, right? This is where you profit off the pullback. Our risk in our trades these days are so small, I don't even get to use pops, right? In order for you to really maximize the potential of pops, the risk of the trade should be more than 20 pips, right? Should be more than 20 pips. So all pops is it helps you to look at a red screen on your MetaTrader 4 and to be comfortable with it, right? Red equals bread. When you think about bread, you think about money. People refer to money like bread, right? Like, chunky, right? When you're in a negative, you still have the potential to profit off the pullback. That's what POP stands for, profit off pullbacks, right? When you see this red bar come up next to your currency when it's active in your MetaTrader 4, that means that it's 10 pips from stop loss, and that's where you can enter the trade again, right? You are getting in 10 pips before it hits stop loss, because tell me in the chat, you've ever seen your trade go like 10 pips, 5 pips, sometimes even a pip to the stop loss, and then it turns on and go back up. It happens. I've seen it happen many, many times. And so a pause allows for you to get into the market, all right, with a smaller risk to maximize your earning potential in that same trade, right? Your second entry, when your pop entry is the same stop, you're using the same stop loss and take profit as the original entry, right? And guys, not every pop is going to be successful, just like not every trade is successful, but you got to remember to remain relaxed. Remember to follow rule number 1. So what I'll do is I'll give you guys a quick example of pops right here, because we got a couple of minutes before we wrap up. Remember, we're risking, we have a $25,000 account, right? So let me put that back up here, $25,000, right? So that means 3% is $750, okay? Boom. So the take profit for this trade is 60 pips and the stop loss is 25 pips. So let's go to Sting You real quick and tell Sting You that. Where stop loss is 25 pips, we're trading Euro USD. Hit calculate, boom, exactly a 3 lot. Okay, so we're going in at a 3.00, right? So this is $30 per pip, okay? $30 per pip. When utilizing pops, okay, you don't want to go in the first position at your maximum lot size. You can break it down in half, or you can even, use lower than half. For this example, we're gonna do half, right? So my first lot size is gonna be a 1.50. This is my first entry. The app told me that I could use a 3.00, which is $30 per pip. Okay, $30 per pip. So I'm saying, look, I know I could go in at a 3 lot, but I'm gonna go in at half of that 1.0, which is $15 per pip. Okay, so the market starts to move, right? The market starts to move, it starts to do its thing, right? Boom, it starts to, it starts to go up. We're feeling good, and then it starts to pull back, right? We know this happens. The market starts to make a retracement and it starts to go in the opposite direction. Because we understand pops, we're not gonna panic. We're not gonna panic for 2 reasons now. 1, because we know that we can use pops, right? And 2, we're actually risking half of what we were originally supposed to risk. So instead of knowing that we could possibly lose 750, right? We could possibly lose half of that instead, right? Half of that, which is what, $375. So if this happens to hit stop loss, you only risking $375, right? Because you are using a 1.5 lot size. But because we are confident in the products, because we are confident in the educators and their analysis, we cool, we relax, we still following rule number 1. And when we see that this red bar, remember this red bar here at the top right here, we see that red bar come up next to Euro USD. That's an instant indication that we're 10 pips from our stop loss. Remember the rules of pops. Pop when 10 pips from stop loss. How do you know when you're from 10 pips from stop loss? This red bar will show up next to your currency. So look, the red bar shows up next to Euro USD, and that's when we get in on our second entry at a 1.5. We got in again at the 1.5, and guess what? We got snipers in the market, and price starts to go back in the direction that the educator called out. And then before you know it, boom, TP smacked. Now watch this, you guys. Watch this. Your first entry, right? You were risking 25 pip stop loss, okay? So the first entry was a 25 pip risk, and our lot size was a 1.5, which is $15 per pip. So you are risking $375 for your first entry, okay? The reward was 60 pips. So 15, right? 15 times 60, the reward is $900. Confirm for me in the chat that you guys can still see my iPad screen. Confirm for me that you guys still see my iPad screen. Okay, good. Right? So my first entry, my risk was $375 and my reward is $900. Now my pop entry, I use the same stop loss as the first entry and the same TP as the first entry. But now my risk is much smaller, right? It stopped, right? My risk is much smaller. I think it was logged out. What? 1 second, real quick, you guys. Let me get back in. You guys with me so far? Share screen. Boom. Let me just bring back up my screen real quick. Watch this. My stop loss for my second entry, right? My stop loss for my second entry is only 10 pips, right? Because I got in here on this gray dotted line. So between here and here is 10 pips. So my 10 pip stop loss, okay? 10 pips times $15, I'm only risking $150 on my second entry, on my pop entry. I'm only risking $150. But from here to, from my second entry all the way up here to TP, right, is now 10 pips plus my 60 pips. So now I have the potential to make 70 pips off this second entry, right? 70 pips off this second entry. Wait, let me make my co-host. Boom. All right, that's the potential that I have. So now on this second entry, 15 times 70 is $1,050. That's the potential that I have now to earn on my second entry because it's much lower down. It's much lower down than my first entry. So I have to add that now to the original pip count. So look, the total risk was 150, 375 plus 150. My total risk turned out to be $525. And my total reward is $1,950. Now, somebody may be asking why pause? Because your risk is extremely lower and your reward is much greater. If we had taken that trade with the full lot size at the original entry, right? Your lot size was $30 per pip and the stop loss was 25, right? You would have been risking your 750, okay? And your TP was 60 pips, so you was making 1,800, right? Your original entry would have made you 1,800 and you were risking 750. But because you split your lot size up and you use pops, right? Now you were only risking 525 and you were able to grow your count by a whole $150 more than what you was able to do with the original entry. Okay, so it's a smaller risk and an even greater reward. All right, so that is what you can utilize pops. Remember, it'll only make sense if your risk is 20 pips or more. We don't really get that type of risk these days, but you know, just for educational purposes, now you guys know how to pop. All right, so rule number 6, just like rule number 1, doesn't require any skill. It just requires you to have the right mindset. You just need to be consistent, right? Ways to be consistent is in that percentage. If you're gonna risk 3%, be consistent with that. If you're gonna risk 2, be consistent. If you're gonna risk 1, be consistent with that, right? getting on trainings are important. You guys heard something here. I haven't taught pops in a while, right? Because our risk is way lower than 20 pips. So I didn't see the need to teach it, but I did that this morning just so I could have it in this recording, right? But you gotta get on trainings because you don't know what you're gonna get and who you're gonna get to teach it in a different way that you can understand, right? Every single day, there's a training and you take over, right? Getting on Go Live is a part of your training because that's where you learn as well, right? You gotta put in those reps. If you want to get your body right, you can't just say you want to get your body right. You gotta go to the gym and actually put in the work to get the results. You guys see our chairman, right? You see our chairman, both of them are, getting really built, right? Every single day, you guys will see them snap that there at the gym. They've been putting that work in, the reps are in, and that's where you see the results, right? Kaino has to wear 2 sizes above because, the muscles are there, right? Set some alarms. If you feel as though you won't remember, set some alarms. Guys, you just heard my phone alarm. I have alarms in my phone for everything. Like they're there. I have alarms in my phone for personal development. I have alarms on my phone to everything. I have alarms set in my phone because it holds me accountable. Set some alarms. You know that tonight is TTT at 8 p.m. You should have an alarm set in your phone for 7:50. And it should tell you TTT in 10 minutes. I've been here in this group for 3+ years and I still have a TTT alarm. I don't need it because TTT is a part of my lifestyle now. I know that every Tuesday at 8 p.m., no matter where I am, I need to be on Zoom. But I still have an alarm to tell me. Okay, you gotta listen and apply. Remember, I said in the beginning that note takers aren't the people that make the money, it's the persons that become the notebook. It's people that apply the notes that they have. That's where you will start to see the money come to life, right? Following your daily goal is important, especially if you are in this 200% growth challenge, especially if you are aspiring to manage one of these large accounts. You got to be disciplined with your daily goal. Whether it is to profit or to loss, you got to be disciplined to it, right? You got to pick a strategy and a product and master it, right? You're here for mastery over time, right? You're here to make money, no, but master this skill over time, and these products will help you with that. Find an educator that is gonna teach the way you understand and follow them. Pick a session. You guys are on this session now. That means that you are good to do morning sessions. Make sure you get up every single day and get on the morning sessions. Monday to Wednesday, right here on Oh Gosh. Thursday and Friday, you get on Go Live, right? Pick a session and stick to it. Find an educator that you love and stick to them. And ultimately, you guys make some withdrawals, pay yourself, and remain disciplined. All right, remain disciplined. You want discipline and you want consistency, right? If you marry those 2 things alongside this entire training that I just did for you, results are inevitable. All right, you guys. So that is it for the call. You guys already know I'm gonna make a quick snap for the gram. So start to take some sevens in the chat real fast. All right, let's go. Good morning, IG friends and family. Already know it's Tuesday morning and I'm up with my takeover family, and we just wrapped up another risk management training. And this morning we did the strategy on a $25,000 account because we are now running a challenge to grow your account by 200%. And the winners have the chance to manage a large account, right? You have a chance to manage a large account. This morning, we saw what that large account could do. So if you guys understand this morning's training and you're going to implement this in your account so that you could be one of the runner-ups to manage these large accounts, go ahead and drop some sevens in the chat. Let me show you guys a real quick sneak peek. Oh my gosh, I ran out of time. Real quick. Let me show you guys a quick sneak peek. This is a bit of the training. You have to be in the team to see it. But go ahead and drop some 777s in the chat real quick. Everything was super clear. Awesome. I see sevens. Guys, remember, believing that you can is way more profitable than believing that you can't. Let's continue to be consistent with our percentage growth. Drop those results in the chat, and I'll see you guys on TTT tonight. All right, to you guys. Awesome. I'm super excited. Let me go ahead and stop this recording.